Greetings, Dwayne, CFRN. As most of you know, there was no radio broadcast on Friday. Personal emergency. I'll talk to you about it more tomorrow during the live trading room or on the radio broadcast. Something we'll be talking about for a few days to come. But anyway, let me I want to go through Friday's recap very quickly. And I think I've found a way that I can trim back these videos. And that's by going through and doing the annotation before I turn the recorder on. It doesn't change anything. It just makes it move along quicker. Okay? It's Sunday night. Globex is trading. We'll get to that in a minute. But let's go back to the vertical line. That's where we stopped the recap on Thursday night, midnight Chicago time. We were running just a little bit later, and here's where we're picking up Friday morning. Okay, we're bullish. We have a blue MA1 above a green BBC. We've got a pullback, and without thinking about anything, calculating anything, referencing or checking, or we just know that according to this basic, beautiful little price action system, we need to go long. We need to be buyers at exactly 1373.50. Not 1373-ish, not 73, 74, exactly 73.50 to the tick. Okay. If you want to know how we do it to the tick, then go to cfrn.net/apply. Take advantage of the free trial. You can hang out with us in the live trading room for 5 full days. Not only do you get to spend 5 days in the trading room, you get to download the platform, the charts, the indicators. You have live data for the entire 5 days. Lumber to livestock to E-minis to grains to metals, all the Forex currency pairs, you name it, we got it, and it's yours for 5 days. No credit card required. cfrn.net/apply. So we know our long entry is 1373.50 to the tick. We never risk more than 2 points on one of these trade setups. This particular trade drew down 1.5 points. 1.5 point drawdown. Entry was here. Drawdown was here. Price ran to here. So it created a maximum potential of 1380.75. Okay? 1380. Well, like I said, this is a new method. So let me give you what the maximum potential was. Price ran to 1380.75 minus 1373.50. Okay, 7.25. I probably just confused a lot of people. I see I did this more than once. Okay, that's alright. We'll fix it as we go. From the entry here to the height of the leg, 7.25 points. Do I expect you to get all 7.25 points? Nope. It would take dumb luck. Do I want you to get some of it? Well, if you're up and trading at this time of day, and if you understand the system, and if you want to learn how to trade for a living, then yeah, I would expect you to get something out of this setup. It moved 7.25 points from here to here, 7.25. Could you at least take 2 out of that? I think you could. Alright, moving on. So we get 7.25. Price pulls back, gives us a long entry, LE, 1377.75. and it runs up to 1379.75. So the maximum potential there, 2 points. Once I get the hang of doing it this way for you, it'll be much quicker. Alright, so we've had one trade with a 1.5 point drawdown with a maximum of 7.25 points. Another trade entry right here. The entry to the tick, 77.75, maximum potential, 2 points. Another pullback, long entry, exactly 13.78. On this one we had probably close, we had 3 ticks, it looks like, of a drawdown. Maximum potential on the trade, 1.75. Price pulls back. We get a long entry at 13.78 right here. We get a 1 3/4 point drawdown on this trade. The maximum we risk on one of these trade setups, as you know by now, is 2 points. Never more. We don't slip the stop. We don't do any of that. It's 2 points. Sometimes we manage the trade very aggressively, and we won't let it come all the way back and hit our hard stop, but we never risk more than 2 points. So 1 3/4 point drawdown, maximum potential on the trade, 1 3/4 points. Price pulls back, long entry, 13.78.5. Maximum potential on that move, on that little leg, 1.5 points. Alright. We pull back again. It gives us another long entry, which if we had taken, we would have gotten stopped out for 2 points. Because we never risk more than 2 points. There you go. Now, on this pullback here, price, the short entry would have been 78. It dropped a point. You could have actually taken a point out of this short trade, but I just called it a stop for another 2 points. Every one of these X's you see, it's going to be it's just 2 points. I'm not going to mess around. Now, price goes back, but we don't have anything until we get our bullish cross. We get our bullish cross here, but we have no pull away. And so all of this goes by without giving us a long or a short setup. We finally get a long entry over here, a valid long entry based on our system, and it tells us to go long right here at exactly 13.78.75 to the tick. Price runs up, maximum potential on that trade. If you took the trade, you're awake, you have money in your account, you pull the trigger, maximum potential 7.5. Price pulls back, system says, hey, you got a long trade right here. If you took it, it gave about a point and a quarter. But I'm just going to call it a stop out, because I think that's probably what would have ended up happening. You might have aggressively managed it and done better, but let's just call it a stop. All across here we had no valid trade setups, not one. Okay. If you don't understand why, come to the trading room. I'll show you why. Here we got the bullish cross, we got the pull away, we got the pull back, we got the entry to go long, and we got the stop out. Okay? Bearish cross. We miss all of this. Is there a way to take advantage of this? Yes. If you come take the free trial, become a partner, I'll teach you. Okay? But for now, I'm just going to say that based on the pure price action setup that we're using, you didn't get it. You didn't get stopped out. There just was no entry. The entry was here, where the yellow arrow is. It said to go short at 1378 and a quarter. And then price dropped 4.5 points. Price then pulled back to 76 and a quarter, and then price dropped 2 3/4 points. Maximum potential. And then price pulls back, gives us another short entry at 1374.75. We run into the close on Friday. If you held a short position going into the weekend, based on the Globex Open Sunday night, maximum potential so far, 4.25 points. Okay. So there you have it. All right, let's count how many times we got stopped out. 1, 2, 3, 4. And that's it. Stopped out on 4 trades. $8 points. However, as you know, even though it's the S&P 500, it's very liquid, unless you're an incredibly large trader, you should very rarely get slipped or experience any slippage on a trade getting in or getting out. But on these stops, you know, let's say that there's 4 trades and you got to tick a slip on each one. That's a point. So let's do this. Plus 1 point of slippage we'll call it 9 points. Stopped out on 4 trades. Each time we get stopped out, it's 2 points. And if by chance you get to take a slip on each one of those 4 stop outs, add another point, you get 9. Okay? Alright. Now, let's scroll our way over to the right and let's do the math. Okay. Put on my glasses, get out my calculator. See what we got. 4.25 maximum potential. 2.75. 4.5. Now remember these stops, we've already counted those. 7.5. Already counted those stops. 1.5. 1.75. 1.75, 2, 7.25, And that's it. We're back to the vertical line that began the day. Okay. So, 33.25. $33.25 maximum potential. Again, what does that mean, maximum potential? That means from our to the tick entry that our system gives us. That's how far it traded. That's how far price ran before it started to run the other direction. Do we think that's realistic? That you're going to get all of that? Nope. Trading superheroes occasionally will, but us mere mortals, no. So we're going to take that 33.25 that we just added up. Okay, 33.25. We're going to divide it by 2, like we always do. In other words, we're going to take 50% and throw it out the window. Because we just went from midnight to midnight. Okay? Midnight to midnight. Well, actually, because it was a Friday market closed, so it really wasn't a midnight to midnight day, but it was still a long day. And we're going to say that you missed either half the trades, or you took them all, but you only got half the maximum potential. Whatever. We're just throwing 50% out the window to make it, realistic. If we do that, if we go 33.25, we throw 50% out the window, that's 16.625. 16.625. Yeah, I guess that's what it is. That's what you're going to do. You want to call it 16? Yeah, let's call it 16. Realistic potential, 16 points. Ooh. But we got stopped out for 9 points. Now you got, I know sometimes people don't fully comprehend this, and that's okay, but we always count, when we do the math at the end, we count every stop as though we made every trade. But yet we throw out 50% of the maximum potential. Isn't that like a white hat way of doing things? Alright. Don't want to brag, just saying. So 16 points. After we took our maximum, 33 1/4, cut it in half, rounded it down to 16. Now we're going to take out 9. Minus 9. Without the calculator, he says 17 potential, realistic net points. Now you probably go, well, gosh, that's an awful lot of work to make 7 points. Apparently you don't know the value of 7 points. Yes, I know that if you trade one contract, 7 points is $350. I also know what it's worth if you trade 10 contracts. I also know what it's worth if you trade 100 contracts. Okay? And I happen to know somebody that trades about 10,000 contracts on average per day. And if you've been listening to the radio show for any time, you know him as well. I'm not saying that you should trade that many, and I certainly don't trade that many. I'm just saying that 7 potential realistic net points is huge. It's not just a good day's work. That could very easily be a good week's work. Friend, depending upon your size, it could be a month's work. It could be a year's work. But we'll save that for another discussion. That's what it is for today. We took the maximum potential, we whacked it in half, 50%, threw it out the window, rounded it down to 16. But yet we acted as though we still got stopped out of all 4 of those trades for a full 2 points, plus we factored in a point of slippage, giving us 9 points. 16 minus 9 equals 7 potential realistic net points. Now, this one trade gave up 7 1/4. This one trade gave up 7 1/2. This one trade gave up 4 1/2. This one trade gave up 2.75. This one trade gave up 4 1/4. But after we do all of our whacking and tossing out the window and, making sure we count all the stops, still 7 there. So what does that mean to you? I mean, can you buy groceries with that? Can you pay your mortgage? Can you, your wife's on you, she wants a new car. Maybe you should come take the free trial. CFRN.net/apply. Maybe you should actually sit through the free trial, shadow the trades in the simulator, and determine if becoming a CFRN partner is a worthwhile endeavor for you. There's no credit card required to take the trial. All you have to do is sign up and then show up. And I'm going to say this: if you're not going to show up, don't sign up. We make room for you, we make preparations for you, we allocate, a simulator for you and a charting platform and data feed. We go to a lot of trouble if you sign up for the free trial. So for you to show up, or for you to sign up and not show up, that's kind of rude. All right? Maybe you want to take the free trial, but the timing's not right. Fair enough. Okay? Send me an email. Say, hey, I do want to take the free trial. I do want to learn how to trade, but I want to be able to give it my full attention. Let's get to know one another. Let's build a relationship. We're a community of believers who trade for a living. Okay? A community. That means we communicate. All right? So let's talk. If you have some questions, email us, support@cfrn.net, or call us anytime during normal business hours, toll free, 866-928-3310. Bert or Leslie will answer the phone. They'll answer any questions you have. If you have a question they can't answer, they'll put you through to me and Mike, and we'll take care of that. Okay? Show you one other thing really quick. Do I want to do that? Do I want to show you one thing really quick, or 2 things? No, I'm going to save it. We managed to pare this down to 23 minutes. I was going to show you the weekly trading zones on the hourly chart for last week. Awesome. I was going to show you how you could have just used one indicator on the hourly chart, the support and resistance dots that print live in real time. Those are dynamic support and resistance, not fixed. Once they print, they don't go away. Maybe when I do the video tomorrow night, I'll make time for that, and I'll show you how just using that one indicator on an hourly chart last week you could have done very well by yourself. Okay? And on the YM, man, it is so tempting not to go through all of this. But I'm not gonna pull back entry right here. Goodness gracious. Look at that. Entry 12,995. Maximum potential 946. It's like 50 points. Okay. It's $250 per contract. Over here. You get in at 12,889. This thing runs to 13,027. That's $500 on one contract. This right here. $12,990. Is that right? That's your entry. This is almost. Let me make sure. I better get this right. $12,990. $12,838. Yeah, 150. I call it 150 points. $750 per contract, one move, one trade. Right here. And you're going, but wait a minute, that looks like the same trade you've been showing us on the ES. It's the same trade I'll be showing you tomorrow morning if you show up in the live trading room. Why? Because that's how we roll, and that's how we've been rolling for quite a number of years. So come join us, cfrn.net/apply. Love to see you in the live trading room. Be there or be square.